Previously on Crunched, we looked at the global reduction in poverty and whether capitalism has played a role in that.
And something that came up a lot was inequality. So I looked at this really cool database, the survey that Ipsos Mori has been running since 1973. They basically ask 1,000 Britons every month what they're most concerned about. And it came out that concern about inequality is at a 21-year high. You can see here that it remained stable, and then when the financial crisis hit, it became really high, and now it's rising again.
So looking at these numbers, you'd expect that these are reflecting what's actually going on beneath the surface, that inequality has been rising over that similar sort of 20-year
Yeah, you would
scale.
expect it to be almost a parallel trend, but plot twist, that's not what happened.
Okay, so what do the numbers actually show?
So we're looking at the Gini coefficient, which is a measure of inequality. So this is the trend, 60s, 70s, pretty stable. It even drops a little bit in the late 70s. 1980s, it starts picking up.
Thatcher era.
Yeah, goes high up. And then since then, look at that, it's remained pretty stable. Even in the years of the recession, it didn't go that much up. The trend is more or less like this.
So we've seen a rise in inequality in the UK, but this was mainly during the 1980s. And then, so things have got worse, but they then sort of stagnated. And I guess, and just to make the point, if we then contrast that with the Ipsos Mori chart that we looked at earlier,
which is a different
time period here.
The time period here is
starting around that.
Yeah.
So we've got inequality staying roughly level during a period when public concern about inequality was really shooting up.
Yeah.
What is it that's happened over this last sort of 10, 15 years that has led people to be so concerned about something despite the stats on the ground saying that perhaps things are bad but they're not worsening? So one thing we could look at here is internationally, even if things haven't been getting worse in the UK for the last few years, they're still pretty bad. So we looked at some numbers from the OECD, which track that same measure of the Gini coefficient. So again, low is better, high is worse. And they track this for every country in the OECD. So should we start with the most unequal country in the OECD is Chile, which has a Gini coefficient value of about 0.46. We've got Turkey, which is at about 0.4. Number 3 on the list
the US.
is Big Sam.
Big Sam, Uncle Sam.
They are on about, so just under 0.4. In 4th, we've got Lithuania. In 5th, Israel. The 6th most unequal country in the entire OECD is the UK. So more than 20 countries in the OECD, but the UK is the 6th least equal. So even though inequality hasn't been rising rapidly, the sheer fact that it is this high kind of explains why it's been high on people's minds. So things are pretty bad in the UK, but we've been talking a lot about this one measure of the Gini coefficient, and specifically the Gini coefficient for the amount of income people have to spend simply as soon as they've been paid. One of the big issues is the Gini coefficient doesn't account for housing costs.
Which, for us millennials, is a really big issue. And so once I've put a roof over my head, then with that income, how does that compare to others? Because as we discussed in the previous video, relativity is very important when it comes to poverty.
Sure.
So let's break it down, Gini coefficient before and after housing costs, and let's see if that has increased.
Okay.
So this is what we looked at before. It's just above, it's like 0.24 in the 60s, 70s, and then we've got this big increase in inequality in the 80s that then remained stable through the 90s and 2000s, just sort of like a jagged line.
Whereas when we say how unequal are incomes after people have paid for the roof over their heads, what we see is, so it's always been very slightly higher, but when inequality started shooting up in the 80s, it shot up more steeply after housing costs had been factored in, and then again has sort of remained a couple of percentage points higher. So what we're saying is the standard Gini coefficient measure for the UK has stagnated over recent years, but when you look at people's actual lived experiences, i.e. after they've paid their rent or their mortgage, we are more unequal than that would suggest, and things are perhaps trending more slightly in a more upward direction. Another issue that you have with the Gini coefficient is it's a very good sort of single holistic average measure of inequality, but it can miss what's going on at the very extremes. So this time I'm going to do a little chart which starts in the year 1900 and then we're going to come through to about 2016. So the y-axis here is just showing the percentage of all income earned in the UK by individuals that goes to the very top 1%. So in 1900 this was probably around 17%, but then started trending down fairly steadily to 1950. There was an inflection point at around 1975, so things are pretty low, coming down towards 5%, but then started trending up again. Around the recession, we're getting back up towards 20%, dipped, but then in the last couple of years have pretty much recovered. So this is the percentage of all income earned going to the people at the very top end of the spectrum. So things got better, but then things got worse again.
So this was more equally spread, you would assume.
Well, yeah, so more equal down here, but then got worse.
And now it's going up again.
And now it's going up again.
So it's the war that really affected them.
Yeah, so the war was a great leveler in that sense, but then 70s and 80s, the rich were earning more and more. The recession, there was a little dip, but that soon got turned back into an upward trajectory. So the rich are still getting richer in the UK.
Now, the Resolution Foundation has also dived into this debate, and one of the conclusions that they drew is that if inequality is already quite high, and I think we've proven that it is in the UK, then it's exacerbated if the economy isn't growing. So we need to focus also on growth, on economic growth. What's really useful is if we compare growth as it is now to how it was in the past.
Okay, so we're sort of saying here that even if things are pretty tough, if everyone has the expectation that the whole economy is growing, then they're still going to be optimistic. Whereas even if things aren't getting worse anymore,
yeah, if growth
we're not
stagnates, then you have less expectations for your future.
Right, so you focus more on what's wrong right now.
So what we're going to do is look at how income per capita is growing. We're going to start from the same baseline. We start at 0. It grows by 10%, 20%, 30%, and then it goes negative, decreases.
Okay.
Let's assume I am my grandmother.
Okay.
Or maybe my great-grandmother. It's 1929. This is what's happening to my household income. 1929, as we know, bad recession, so my collective household income goes down, and then by 1943 it's gone up. It's gone by gone by nearly 30%.
All right, so I'm now going to step in as, I guess, maybe my young granddad. So again, we're going to start from 0. So there was a dip initially, so incomes fell by more than 10%, but then again a pretty healthy recovery until by 1961 we were up here very much in the black. So a downturn,
still
but
not
a big
too
upturn.
bad.
Yeah.
Okay, let's go back to when my parents were in school. So now we're in 59. Well, that's my mum won't like it if I said that. Very, very little. Their family income grew by over 30% by 1973.
Now looking at what happened in the 90s, so when we were both growing up, again, little dip, but then pretty solid growth up to 2008, so up to the start of the recession.
And then ta-da-da-da, the
Let's
recession.
look at the last 10 years.
And this is what happened. Big dip with the recession, fine, all as well as expected. And then ta-da, that's where we are now.
So things have totally petered out.
Yeah.
So we've seen...
We are at less than 10%. They've grown by about 4%.
About 4% higher than what things were 10 years ago. So a big dip, barely recovered, and very slightly above where we started. So you can see again why, even though inequality as itself is maybe not soaring, things just aren't good generally, and that leads people to spend a lot more time looking around them and saying things aren't fair. And so let's look again at another way of slicing these numbers. So for this one, we're going to look at a slightly different chart. So instead of having years along the bottom, we've got the different percentiles of the income distribution at the bottom. So from the very poorest people on the left to the very richest people at any given time on the right. Vertically, we're going to look at for someone at that level of the income distribution, did their income grow up to about plus 6%, or did their income shrink? And we're going to draw the curve for how different people's incomes grew or shrink during different periods of economic growth, shrinkage or stagnation. So do you want to kick us off?
Yeah.
With...
So I'm going to start with, again, my parents' generation, 1977 to 1991.
Okay.
This is what's happened.
Okay, so people at the very bottom end there, some of the poorest, actually got poorer during that period.
Yeah.
But middle income and high income people definitely got richer.
Yeah.
All right, so I will now move on to the period from 91 to 2002-3. You've got everyone seeing positive income growth, and it was pretty flat growth. Next up,
2003 to 2008.
so I guess we've seen 3 periods here where during the 70s and 80s, which we discussed was a time when things were getting more unequal, at least for most people, they were earning more. We've then seen another generation where everyone was earning more, and then the period leading up to the recession where some people getting poorer, some people getting richer. What's happened in the very most recent generation?
Yeah.
What
happened when we left university?
These glorious last 10 years.
Kind of flat for everyone, including the richest. So this is 2008 to 2018.
That's right, so barely above zero, right the way across the income distribution. So this is a time where even though inequality hasn't been getting worse, there's just not been this sense that people's economic prospects are improving.
Yeah.
We started
With concern.
We've seen more people in the UK now say inequality and poverty are one of the most important issues facing the country than at any time in at least 20 years.
Yeah, and this concern is at a 21-year high.
So then we asked why.
Because inequality has basically flatlined.
So we've seen a period where inequality wasn't growing, but concern was.
It's flatlined, but we found out that it's really high when you compare it to other countries.
Okay, so across the whole OECD, Chile has the highest Gini coefficient of about 0.5, but then the UK comes in at number 6, so still pretty suboptimal. One reason people are concerned is the UK is simply pretty bad for this. Then we asked, the Gini coefficient measure that we've been using here, maybe the problem is there. It doesn't capture enough of what is actually going on in the ground.
Yeah, and it doesn't capture something that is really crucial for us, and especially our generation, which is housing costs. Once we've put a roof over our heads, the trend is still the same, but it's higher up than we were when we didn't account for the price of housing.
With the Gini coefficient, we're not really seeing what's going on at the very extremes. Whereas when we look at the percentage of incomes earned by the very richest, after a period of decline, those have been rising again, and even after the recession are going up. So the data do seem to suggest that the very rich are getting even richer.
Yeah, and also we've made the point made by the Resolution Foundation that if the pie isn't getting larger, then what's the use of being concerned about the slices? We need to focus on growth, and we've seen that compared to previous generations and previous instances, growth hasn't been that much. It's not flatlined, but it's very low compared to previous, our grandparents' generation.
And another way of looking at that same data, again, with a hat tip to the folks at the Resolution Foundation, is to look at how incomes right the way across the whole distribution have changed. And again, we found that this post-recession generation is the one where people have
suffered the most.
People have suffered the most. They're accounting for inflation, incomes have pretty much been flat. Whereas in all previous eras, even when things were getting more unequal, most people were seeing their spending, their incomes going up.
So if we bring this all together, then it becomes much easier to explain why people are so concerned about inequality. And if we add a couple more ingredients, like the political divide after the Brexit referendum, widening social inequalities, tragedies like Grenfell, and the perceived link between wealth and opportunity, it's much easier to see what's going on.
Yeah, people don't feel happy about things. There are divides everywhere, and incomes aren't going up. So concern about the haves and the have-nots, it does make sense that they'll be rising.
Exactly.